Welcome back. We are in conversation now with Devang Mehta, Head of Equity Advisory at Centrum Wealth Management. Devang, thanks for joining in. Very quiet day today for the market. Not much is moving. It's been actually a quiet start to the year, at least at the index level. But, you know, we were just looking at our conversation back, I think it was in December sometime, where you were talking about themes for 2023. And I want to pick up on one of them where you said discretionary consumption. This is always an interesting one. How have you started sort of maneuvering in the portfolio to play on this theme? Are you looking for consumer technology companies? Are you looking for FMCG? What part of the consumer do you want to bank on?
Thanks for having me on the show, Surbhi. I think, yes, very clearly you got it right that we mentioned that as one of the theme, and why we are playing that as one of the theme is clearly, if I can again, at the expense of being repetitive, I can say we generally like the 4 C's of the market, and the first C is clearly consumption, which India has always been on a strong footing, be it discretionary, be it non-discretionary, and particularly at this point, your luxury and discretionary consumption at the upper end is surely thriving. Be it pent-up demand being converted to structural demand. So one is this consumption. The second is capex, which is necessarily coming from the government as well as the private sector. Credit growth again from the economy, from the banking sector, around 18%, which again boosts consumption and capex. It's a chicken and egg, right? So both of them are thriving on even credit growth. And last but not the least is corporate profitability, which I think we are coming to the fag end of this the third quarter number season, where we have seen generally for discretionary consumption, coming back to the question, is more or less we've seen some of the companies like Titan again, which has been a favorite and been a rock steady stock during this entire rocking boat over the last 2-3 months. We have seen so many events, but most of the companies which came up with numbers were sort of, at least if not enthused by the exact numbers, the commentary was sort of bullish, or commentary was rather more on the front foot. Also, one thing which we are seeing is raw material cost for a lot of these companies had an impact earlier. That seemed to be probably waning away. Yes, we are again seeing certain metal prices probably thriving, but most of the raw material or input cost pressure, be it consumer discretionary, be it even you can probably count something in building materials, so home improvement as consumer discretionary. We have seen great corrections in some of these businesses like Asian Paints or Pidilite, certain, just mentioning few of them. I think most of these companies are probably bound to come back as soon as the FII flows resume, or as soon as the market gets into a sort of a little bit of a bullish territory, if not completely bullish.
There was one argument which was made on Titan. They're saying that the competitive intensity is picking up because many of these regional players, the large regional players like Kalyan, Malabar, they're now aggressively expanding their storefront in their non-core markets in the franchisee format, or even going via their own stores. So they're saying the competition for Titan is only going to pick up because these companies like Kalyan and Malabar are now looking to expand beyond their core areas. So we'll be watching that. Devang, what about insurance, right? In the month of January, insurance was making a comeback, but then came the budget and there was a slam dunk. Since then, the stocks have recovered, but they haven't gone back to their pre-budget levels. Thoughts on insurance?
Yeah, I think this is one sector which we started to sort of like 1.5 year back. I think post COVID subsided. We knew that most of these companies had huge claims, be it HDFC Life on the life insurance front, or even ICICI Lombard to be specific on even general insurance front. Most of these companies were sort of marred by the claims. But what we saw in the budget is, of course, 2 things. One very important thing was sort of that 5 lakh limit, where probably your taxable post that type of a premium, which again impacts the HNI segment or the ultra HNI segment, who probably sought insurance as one insurance, and second as even a tax arbitrage or an investment tool. That part goes away, which impacts some of these companies. And we were on call with few of these companies and listening to a lot of commentary. I think most of the companies are categorical, saying that this will not have a material impact, maybe a 5-7% impact on the profit pool, which I think there will be a lot of product or a lot of structuring around it where they would not let it go away. So my sense is that the reaction right now is a little more, I can say, circumstantial in a way. The second part is when you opt for the new regime or the second regime where investments are not compulsory. So the new age Indian or the youngsters in India probably would not invest much. They would probably use it as a consumption tool. So that also is a I can say, a negative sentiment impact for insurance businesses as such. Yes, probably the valuations had risen from there. It has come down for probably HDFC Life or SBI Life less than around 2 times or 2.5 times price limited book value. Stocks look interesting. Yes, it would probably go through that sentiment change for the next 3-6 months where people will just sort of ignore it. But my sense is there is value available over here.
Speaking of insurance, take a look at the GIC stock. It's just completely rocketed away, 8.5% up on GIC. Quite a mover. Of course, that's a reinsurer that we're talking about. But that is the conversation on insurance. Before we let you go, Devang, you've named a lot of companies. Most of them are large caps or very large mid caps. Are you looking at anything in the tier 2 category? Any of the smaller companies? And if so, then what are you picking and choosing?
One sector which I can't sort of forget is capital goods or ancillaries in the capital goods space, or something like an automation or a tech AI businesses stuff. I think this as a space is sort of developing, and over here we find a lot of alpha generating candidates, something like a Hitachi Energy, which has been a favorite. Of course, the company didn't report great set of numbers, but over the next 3-4 years, somebody wanting to get into a wealth creation journey. Again, saying not recommending, but most of these businesses we hold in our client portfolio. So something like a Hitachi Energy, something like a L&T Technology Services, again a company which sort of has collapsed in terms of valuation, but the numbers have been encouraging, the commentary has been encouraging. It's into AI sort of robotic sort of space. Honeywell Automation, another company which we sort of like if somebody wants to invest in classy businesses rather than getting into stuff which will be done around. These are companies which would benefit from India INC doing a lot of capex. My sense is these 2-3 ideas are where we probably would bet more for the next couple of years.
All right, Devang, we leave it at that today. Lovely to chat with you as always, but we are going to get into a short break now. You don't go anywhere. There's lots more market action coming up for you in just a bit.